Hello everyone and welcome back to the channel. Today we're going to be looking at HIMS stock and why I believe it's a buy right now. Now if you clicked on the video, you've probably heard of this company and why a lot of people think it's undervalued. They have explosive growth, growing over 44% year over year. They're at an attractive valuation, trading at only 6 times trailing sales. They're in a good financial health. They're debt free and they have $250 million of cash on hand. And they're disrupting a market that hasn't been disrupted in a very long time. They're innovating when others are simply staying the same. Many retail investors are calling for this company to be the Netflix of the healthcare industries. Even analysts are bullish, with an average price target of $45, 50% higher than the current price today. So now let's take a closer look at the company, first from a marketing and brand perspective, and then we'll dig deeper into the financials of the company and see what kind of projections we can create. So this is something I haven't seen a lot of people talk about. We're on the HIMS landing page. This is where they sell all of their men's products. They also have the HERS landing page, which is where all the women's products are sold. So they separate both. Now, once the client gets onto this page, what is the first thing they see? They're seeing solutions. Lose weight, tackle anxiety, regrow hair, get smooth skin. These are all problems that the client is looking to solve, and they immediately get drawn into this. Now, once a client decides what problem they want to solve, they simply click on it, and it brings them to a questionnaire. And the customer immediately starts to build a relationship with HIMS, and they can start learning what the problems are of that person, and specifically how they can cater to them. Now, the rest of the page is extremely well built. It's Apple-esque. It reminds me of the marketing that Apple uses, with lots of clean visuals, and it makes it feel very, very human. This part of the website talks about some of the benefits of one of their products, and then it continues on to give reassurance to the customer by talking about their licensed practitioners and how they have to be certified. Now let's compare this to Lilly Direct. This is the HIMS version of Lilly, one of the largest pharmaceutical companies in the world. This website is very basic. It asks you to select a condition. It doesn't offer a solution immediately. They use words like condition, which immediately makes the customer feel bad, listing things like diabetes, obesity, sleep apnea. They're not offering solutions. And the rest of the website is very grim, very simple. It's not attractive at all. Now we're back on the HERS website, and as you can see, there's a clear coherence between the HIMS and the HERS side of the business. And I think this is something that's clearly overlooked. They're really building an aesthetic, a strong brand that customers feel emotional about and feel like it's a brand that cares about them and their well-being. Now I want to jump into the slide deck from the previous earnings call. Now they gave a long-term guidance for 2030 of 20 to 30% EBITDA margins and mid-70s gross margins. Now I want to extrapolate those into an Excel model and see what we can find in terms of valuation. Here we are in Excel. We have a very rudimentary model. We have revenue in 2025 of $2.3 billion, which is what the company is guided for in their last quarterly earnings call. Now, I think that they can get into $5 billion of revenue by 2030. This would assume roughly 15% year-over-year growth for the next 5 years, which I think is extremely doable. At $5 billion of revenue, we put a 15% net income margin on the $5 billion of revenue, which gives us net income of $750 million. With the $222 million of shares outstanding, we get an EPS of $3.38 in 2030. Now, if we apply a 20 P ratio, we get a stock price of $67, P ratio of 30, almost over $100 stock price, and a P ratio of 40, which would assume that the 15% revenue growth is likely to continue for many years. We would have a stock price of $135. Now, if we conservatively decide on $4 billion of revenue in 2030, which I think is a very low estimate, we would still have a stock price at $54 on a P ratio of 20, which would be extremely low valuation for a company growing at this rate. Now let's be a little more bullish and say that the revenue will be $6 billion in 2030. We'd be looking at a nearly quadruple of the stock price today on a P ratio of 30. Now looking at the stock chart, I think the zone of support right now is between $29 and $24. I think that any buy in this range is going to turn out to be a very solid buy in the future, especially that right now the price is confluencing with the 200 MA. So with such strong fundamentals, technicals, and financials, I believe that HIMS stock today is a buy. So thank you for watching, and I hope to see you next time.